The S&P 500 is up 15% in the first half of the year. It now is up 15.5%. Problem with that, not the problem, but the shift has been in the second quarter. It was only up 4%. So most of those gains came in the first half. And NVIDIA is the stock, so let's just talk about that a little bit. NVIDIA was up 850% since January 2023. ChatGPT was announced in November of 22, and after Christmas, people kind of realized this was a big deal, and NVIDIA, the stock, is up 850% since January 23. It's up 175% in 2024. The slight little change that people need to be looking at is that it's down 14% from the June 20th high, which was at $140.76. It's down to 122 today. Sometimes I think about the world and the universe, and I realize that the longest day of the year was June 21st, plus or minus 6 hours, depending on where you are. But the peak in NVIDIA on the longest day of the year kind of shook a few people, and the big spike up on that day has reversed, and the stock has not traded well since. And for good reason. You know, I think the economy is slowing down, and the concentration in the stock market has been phenomenal. I mean, there are six stocks that have made up 2/3 of the gains so far in the stock market in 2023. I just have some numbers here because they're staggering. Those six stocks, 113% of the Q2 gain was in six stocks. That means 494 of them had a negative return. So this is as concentrated as I've ever seen it. NVIDIA was up 31%. Oh no, excuse me. It is responsible for 31% of the first half gains of the S&P 500. And it's responsible for 43% of the S&P Q2 gains. Apple is responsible for 31% of the second quarter gains, right? So that means between NVIDIA and Apple, two stocks are responsible for 3/4 of the gain in the S&P 500 index in the second quarter. I don't think that's ever happened before. And at the same time, the smallest stocks, the Russell 2000, that's unchanged. The Dow Jones Transportation Index is negative, and the NASDAQ was up 17% in the whole first half. So I think what you've got here is a peak in 2 or 3 stocks. I think that if you look at the top 2 or 3 stocks, on June 20th, they had a market capitalization of $9.9 trillion, which probably is hard to kind of fathom. The whole stock market's worth about $45 trillion. But the point is, at $9.9 trillion, that's larger than the entire stock market in China, which happens to be the second largest stock market in the world. So you've got 3 stocks that are larger than the entire stock market in China. And that tells you something, you know, that tells you a lot. So the fact is that things are very, very expensive. And I think with respect to NVIDIA especially, you know, their earnings are very solid. They're growing. I think in the 12 months ended at the end of Q1, their revenues were up 600%. So I don't think they're going to do that. I think their revenues are going to start slowing, but you know, the sales of their products to the people that are building out AI are phenomenal. So I think that there is a place for NVIDIA in your portfolio. There's also a lot of risk to it because a tremendous amount of future sales are priced into the present price. And that's the problem with all investments. So I think that you want to be involved in it. I think there's a better way to do it than if you own it outright, stay with it. The stock went up 850% since January 2023 and is up 113% or 175% in the second quarter, right? Or in 2024. You're playing with house money here. So I think you probably won't see many sellers, but the fact is some institutional sellers will emerge at these levels. I think the stock is selling at something like 43 times sales, you know, which is extraordinary. Apple's selling for 10, 9, 8, you know. And normally normal businesses, when they get sold in the open market, they get sold for 3 times sales or 4. So at 43 times, it's a really expensive company. But we've never seen growth rates like this as well. And then their next product is probably going to be better than the one that's out there now. So I think you should hold a piece of NVIDIA. I think you should be expecting some tremendous volatility. I think you will see institutional investors come in and buy the stock if it gets lower here. And I would, speaking of the stock market, I would expect a down trade this summer, July or August, probably August. But I think that if you get one, and I'm talking about the variety that we saw in April, where it kind of was down 6% and at one point down 10%. The government, probably the Treasury Department, has got plenty of cash on hand to put into the economy to make sure that the economy feels okay into the election, and they'll do it. So Janet Yellen and her Treasury will throw $1 trillion at the economy if the stock market goes down 5% or 10% anytime between now and the election. And that's why it's not really selling off that much. In fact, the NASDAQ made a new closing high today. It's at 18,028. That's the all-time high today, all right? This is essentially the first week of the second half of the year, and the NASDAQ's telling you that you want to be involved. And investors, they want to be involved too. There's a lot of money, algorithmic momentum money that's flying in. I think I saw some numbers. I'm about to put my weekly report together. The inflows into tech funds last week was the highest ever. So it's a bull market. There's no question. There's investor flows and there's algorithmic flows that are going toward the market and its momentum. And they don't care about what the level of inflation is or what the level of Fed funds is or even what earnings are. They just see that money's going into them and their computer says buy. So sadly, that's how the market works. It's not really fundamental anymore, but that's the truth. So be careful, be cautious, stay invested in the go-go part of the economy, okay?